Hello everybody, this is Joe Cusick from the Cusick Group, and it feels like we're right back where we were 2 weeks ago. Well, we are. Strong jobs report this morning really helped out the markets as the catalyst here on the last trading day of the first week in July here on this Friday. We see that the bond complex is under a little pressure. The 10-year specifically has been pulling off after basically been at all-time highs at that 136, 137 level. Not all-time, but seeing at highs we haven't seen in a long time. You're seeing that the 30-year is pulling off of that overnight high of right around 178 and some change. Testing that 179 level. It was trading right around 177 before I came on this morning. Now, this area in the yields coming up, prices coming down in the bonds, has put a little bit of maybe a potential catalyst for specifically financials and looking at banks and insurance companies. They've been beaten down recently, and this move in yields to the upside, specifically in the 10-year, well, that could be a positive. Now, if we do see that prices do start to firm up in the bonds and yields start to come down at these levels that are really just mind-boggling, that could then in turn turn the financials a little bit more bearish. That's going to squeeze the net margins for banks, and their profits are going to start to be squeezed a little bit, especially now that we're going into the July earnings cycle. We're going to see this opportunity kind of play itself out. You know, if you're looking at the banking index, and you can look at one of the major banking ETFs, you're going to see right now that they're going to have to start breaking price resistance to the upside. If they don't, you can see that that catalyst right now that we're seeing in the bond markets is really not going to flush out. But what is flushing out to the upside specifically is the S&Ps. The S&Ps right now are looking to be poised to challenge 2131. The jobs numbers, it's the movement in the bonds right now with prices dropping, yields starting to tick up. That's been a catalyst for the equity markets, and we see the S&Ps looking poised to challenge that 2131. Now, if we don't see that potential test and break, that's going to be negative, and that's what we're going to watch going into next week. As a matter of fact, if we don't get a break of those all-time highs at 2131 in the S&Ps, I'm going to look for downside to start playing itself out potentially, especially now that we're getting into the earnings season. Any misses, any type of information that's going to come out into this earnings season is going to start to really put some more volatility. And I would say be cautious, especially with the reaction that we've seen today. If you don't see a close well above 2100 in the S&Ps, I'm going to take a tempered look at this. Now, taking a look at the commodity markets, I know the grains and the softs in general have been under mixed markets. They're under a little pressure today, had a few bounces here and there. But I want to look at the crude markets because the crude markets have been, well, short-term bearish. They've pulled back. They're holding that 46 level today. They're actually in a range of around 46 to 46.50 on West Texas. I think this is going to continue to remain in play with weakness overall coming into play. I think it's retaken its 20 and 50-day short-term moving averages, and there's definitely support if you take a look at the 20-day estimated moving average, which right now is right around 44.60. That is a base. I think that the crude markets could, unless we have a catalyst economically, both domestically and globally, I think that overall there could be a test of that 20-day moving average. Now, with that being said, I think that it should hold that 44 level, that 44.60 level. I think that's an opportunity, and that's where I'm going to look at crude over the next week or two to see if it challenges, because we have seen an inverse head and shoulders, which is a technical pattern. It is a bullish pattern. So overall, holds that 44.60 level on a pullback. That could be a great opportunity for those of you trying to look for getting some potential crude exposure going into the latter half of the summer driving season and then going into Q3 and Q4 of the remainder of this year. All right, folks, have a great weekend, and we'll talk to you later. This is Joe Cusick from the Cusick Group.